Hello everyone, I'm Priya and today we're starting lesson 33 of the Daily Trading Coach. Friends, I want to ask you a question. Do you know your biggest trading mistake? You might say, yes, I do. Sometimes I take trades because of FOMO. I overtrade. I fail to follow my stop loss, or I book profits too early. But if you already know your mistake, then why do you keep repeating the same mistake again and again? That's exactly the question today's lesson answers. Because the problem is not that you can't see your mistake. The real problem is that you haven't truly felt the cost of that mistake yet. And until a person fully understands the real cost of a habit, they're rarely ready to change it completely. In the previous lesson, we learned that we need to identify our trading patterns. Which habits are helping us move forward, and which habits are repeatedly holding us back. But today Dr. Brett Steenbarger takes this idea one step further. Brett Steenbarger says that simply recognizing a pattern is not enough. Real change begins when you honestly understand both its benefits and its costs. Just think about it for a moment. If a trader keeps overtrading, do they really not know they're making a mistake? Most of the time they do know, and yet they keep doing it. Why? Because every bad habit gives us some kind of short-term benefit. Overtrading can make us feel like we're in control of the market. FOMO can create the feeling that we're not missing out on an opportunity. Revenge trading can give us temporary hope that we'll quickly recover our losses. In other words, the habit may be harmful, but the mind is still getting some immediate reward from it. And until we understand both the reward and the cost of that habit, real change becomes very difficult. Let's say this happened. Over the last month, you broke your stop loss several times whenever the market moved against you. Instead of accepting the loss, you pushed your stop loss a little lower. At that moment, you convinced yourself that the market would come back. And to be fair, sometimes it actually did. A few of those trades recovered and ended in profit. That's exactly why the brain doesn't see the habit as completely wrong. It starts believing that breaking a stop loss can work sometimes. But when you look back at your entire month, you discover that your biggest losses came from the very trades where you broke your own rules. And this is where self-coaching begins. Simply writing, "I didn't follow my stop loss today," isn't enough. You also need to ask yourself some tough questions. What was the real cost of that decision? How much money did it cost you? How much extra stress did it create? How much did it damage your confidence? And how many times did it pull you away from your trading plan? When you honestly write down the answers to these questions, your mind starts looking at that habit differently. It no longer appears to be just another mistake. Instead, it becomes something whose true cost is impossible to ignore. Friends, this idea doesn't apply only to trading. It applies to almost every area of life. Everyone knows that exercise is good for them. Everyone knows that eating healthy is the better choice. Yet many people struggle to stick to these habits consistently. Why? Because knowledge and motivation are not the same thing. Knowing the right thing is easy. Doing the right thing consistently is much harder. The same thing happens in trading. We know what we should do. We know what we shouldn't do. And yet we keep repeating the same mistakes because we haven't truly felt the real cost of those mistakes. And that's why a successful trader must become more than just a market analyst. They must also become their own coach. A great coach doesn't just point out mistakes. A great coach helps you see how expensive those mistakes really are and how powerful the rewards of good habits can be. That understanding slowly changes behavior. And lasting behavioral change is the foundation of long-term trading success. Now I want to share the most important idea from this entire lesson. Most traders believe that self-coaching is only necessary when they're losing money. But the truth is exactly the opposite. The time when you need self-coaching the most is when you're doing well. Just think about it. When your trades are working consistently, when your confidence is high, when your account is growing, does that mean it's time to relax? No. In fact, that's when you need to be the most aware and disciplined, because success can be just as dangerous as failure. Many traders start taking their process for granted as soon as they experience good performance. And little by little, the very discipline that helped them succeed begins to fade away. Professional traders have a unique habit. They don't analyze only their losses. They analyze their best trades as well. They ask themselves, what did I do right? How can I repeat that behavior consistently? How can I strengthen my biggest strengths even further? And that mindset is what creates the difference between an ordinary trader and an elite trader. Friends, many people come to the market to make money, but very few come to the market to improve themselves. And that small difference creates a massive difference in results over the long run. Elite traders don't focus only on profits. They focus on performance because they understand that if performance keeps improving, profits will eventually follow as a natural result. Let's imagine there are two traders. The first trader focuses only on how much money was made today. The second trader focuses on how many good decisions were made today. For a while, the first trader may appear to be ahead, but over the long run, the second trader is far more likely to become consistent because they're strengthening their process. And a strong process is always more sustainable than a short-term result. Remember, the market will never be completely under your control. But your behavior can be, and that's exactly why trading psychology is so important. Now here's another powerful idea. When you write in your trading journal, don't turn it into nothing more than a collection of data. Turn it into a source of emotional feedback. If you made a mistake, take the time to truly feel its impact. If you executed an excellent trade, allow yourself to feel proud of it. Because people learn through logic. But real change is often driven by emotion. As long as your mistakes remain just numbers on a page, they'll be easy to forget. But when they become emotional experiences, your mind starts taking them much more seriously. And the same principle applies to your good habits. Celebrate your positive behaviors. Recognize them. Appreciate them. Because behaviors that feel rewarded are behaviors that tend to be repeated. Friends, the most important assignment from today's lesson is this. The next time you write in your trading journal, don't just record whether the trade ended in a profit or a loss. Also write down, what did that trade teach you? What was the real cost of that behavior? What benefit did that habit give you? And if you continue following the same path, where will you be 1 year from now? This simple exercise has the power to change the way you think. Because the moment you clearly see the true benefits and costs of your habits, that is the moment real change begins. And finally, remember this. Success in trading doesn't come from simply finding the perfect strategy. Success comes when you learn to repeat the right behaviors over and over again. Your greatest victory is not one big profitable trade. Your greatest victory is the day you gain control over your bad habits. Because the market can change your account balance, but only you can change your behavior. If you enjoyed today's lesson, make sure to hit the like button. And if you want to develop a deeper understanding of trading psychology, don't forget to subscribe to the channel. I'll see you in the next lesson. Until then, take care of yourself, stay disciplined, and don't forget to keep writing your trading journal. Thank you.